Welcome to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson, and my co-host, Terry Torito. He's also a loan officer here with me at NAF. You've seen him on other podcasts because he is part of the BBT mortgage team. And Terry, today we wanted to discuss a couple different products that we have. Products that NAF offers, but some other things that like Fannie Mae has changed, such as 5% down multifamily. And, what is really common right now in the market and why buying right now in this market is a good thing, right?
I get that every day. Thanks for, it's been a while. Haven't been on, and I've been extremely busy. So sorry I haven't been around, and which busy can mean a lot of things in today's world. But no, I've been getting there's so many people who are like, I'm just not going to buy right now. Just going to wait for interest rates to come down. And I said, well, you know what? You got to look at all sides to this, especially, well, there's silver linings. I have 3 clients right now, got their houses for $20,000 under asking price, and they got 3% seller paid. So
Right.
Closing costs paid. Well, now, hence one of the programs that everybody's talking about are buydowns.
Right.
What are buydowns? And, it's one of those things where obviously we don't have that crystal ball and we don't know when rates are going to drop, but we hope within the next couple of years, you would think. If not, I'll be standing on the corner with a sign in my hand. But, is the buy down, which buy downs are great. They're obviously only used you can only use them on primary and secondary homes, no investment properties. But the sellers have to pay for that buy down.
No. So what is specifically is when we say buy a 2-1 buy down, what does that mean?
2-1 buy down means is for the first year. So per se that you locked a rate in today at 6.7%.
Right.
So for the first year, your rate is 4.7%. The second year, it is 5.7%. And then the third year through the 30 years will be your 6.7%. So, but we hope during that time that if rates do drop, well, there you go, you know.
So what is the cost then? Like when we say buy down, well, I'm paying to buy it down. What is the cost?
There's a lot of different. So obviously there are products we have. There's a 1-0 buy down. There's a 1-1-1 buy down. There's a 2-1 buy down, 3-2-1 buy down.
Right.
So let's say, let's for an average on a 2-1 buy down, the average cost, let's just say 2.4% of the loan amount.
Okay. Let's break it down though per year, because what it really is you're actually paying the interest, that 2 points of interest, that difference of the interest up front that first year, and that 1 point. So you're just paying for that difference in it. It's subsidizing the payment is what it's really doing. So the seller is subsidizing your payment for the first 2 years.
Correct.
Right. So let's say that 2 years, that first 2 years, that buy down on what? You got some numbers?
I do. I did some numbers on I did a $600,000 house because that seems to be the new normal. But with that, so if you were locked in at a 6.5% rate, so that first year, your payment, you would save $714 a month.
Right.
A month. Right. That's like $8,500 a year.
So that's what that percentage of closing costs, that 3% you get from the seller, is paying towards that $8,500.
Right. Yes.
So if you have a $600,000 purchase price and you have a loan amount with 5% down of
$570,000.
$570,000. So you get 3% of that, which equals out to be what, 18 and some change, right?
Yep. Right.
So now you have 8,500 that first year, and then the second year is going to be right around 4.
Second year, yeah, your payments for that second year then are going. A month you're going to save about $366 with a yearly savings of like 40. Let's just say 4,400.
So you have that 8 plus the 4, so 12. I'm using
$12,000.
$12,000.
Yeah.
To get that payment subsidized, right? So now instead of really feeling the effects of a 6.7% interest rate or 6.5% interest rate, you're getting a much lower payment, right?
It allows people during that time, per se, someone's like, they're advancing in their job.
Right.
Hey, I'm getting a raise next year, a good one. I'm going to be there in a year. That'll be easier to subsidize it, and so on. So I think that it's not a bad thing. Take advantage of it because God knows it ain't going to be around forever,
Well,
you know?
the reason why it's not going to be around forever is, we are in this typical swing of this time of year where people went back to school, you got all the holidays, it's cold, people don't buy homes. I mean, traditionally across the nation. And, it's kind of funny because we talk about negativity in the market all the time. And one of the negative things in the market is like, oh, right now you are getting discounts. Like, oh, there's this crash and all these different things, right? If you just look at every single year going back the last 30 years, you're going to see a slowdown in the market in this time of year.
Always.
And, I personally love it because here's why. I mean, for all the mortgage, all the real estate people, that follow us, why do I love it this time of year? Because guess what? Our buyers can typically take advantage, get some sales, get some discounts, and get closing costs paid. And it's tough, specifically the tough ones, right? You got the first time home buyer that they scraped enough together to get 5% down or
Yep.
3.5% down.
Sure.
And it is FHA in the springtime, they go to buy a house and they're asking sellers to pay closing costs. Good luck.
Right.
Right. You're not getting
100%.
it. So, what I've been really good with is when I'm, circling back to those people, because some of those people drop off,
Well,
and
they get discouraged.
they
They
get,
get, they're just not happy about it. And they're like, I'm done. I'm going to rent.
right.
And it's just keeping them informed. I don't know. It's like I said, right now, it's a guy argued with me there and he's like, I'm not going to buy. I'm like, think about it. I was like, if interest rates, he's like, if you wait for interest rates to come back down to a 5, and let's say 5.5, that's going to be a feeding frenzy.
Right.
Feeding frenzy. Guess what? You're going to have 13 offers on that house now. You're going to have to waive inspection on it, which you don't want to ever. You're going to have to bring, let's say, 50 grand over asking, where guess what? Now you got 25,000 off of the price plus your cost paid for, or your closing costs paid for. Guess what? You are in the driver's seat,
Right.
Yep.
Yep.
And now you're not throwing a next, you're paying $2,000 a month in rent. Well, you're going to rent for one more year, $24,000.
Right.
That's not yours. See ya.
Right. So, I mean, needless to say, right now we can get that. We can get, just closing costs paid. Just let's just say you was like, I can eat that payment. That's not a big deal. We can, but I need the money because I'd rather have that money for closing costs versus putting my own money out there or taking some other loan program that has higher interest rates and so forth.
What I want to say too, even if it's like for agents who are like listing a house per se, don't be afraid when you see that, because think about this. Instead, when someone comes to you with that per se, they're like, they offer you, like I said, $600,000 for a house, but then someone offers you 24,000 um off of the purchase price.
Right.
Okay. Well, what about just say, hey, we'll give you, what about 3% seller pays? Guess what? When you do those numbers,
Yeah.
now the owner of the house is going to make 570,000 versus 547,000.
Right.
So guess what? Now your client, you're making more money for your client. It's a win-win situation.
Yeah, I mean, I think that, I've seen that trend is let's not discount the house, but let's offer the seller paid closing costs.
Right.
Specifically because, on a buy down, the client cannot do their own buy down.
Right.
They can contribute money to discount points so they can buy it down discount points. And I can tell you what, if you try to buy it down 2 points, it's thousands of dollars.
Thousands of dollars.
It to even get it to a point, right? So you can't just quite, there's points and fees, there's all kinds of regulations with that, but the seller can do the 2-1 buy down. Again, it's subsidizing that payment for the first 2 years, or even a 1-0 buy down.
Right. Which is, I have a client doing that right now.
Right.
And they're like, hey, she's like, I am finishing my college by the end in fall. She's got her job all ready. So she's like, we're going to be able to afford that in a year if rates don't come down.
Right.
Just helps us for a year. And I'm like, hey, and a 1-0 buy down is, I mean, roughly, I think, like I mentioned, it's 2.4 roughly on that 2-1, but on a 1-0 buy down, it's like 0.8%. 5% of the loan amount. It's not a lot.
Well, let's say, that scenario you're talking about, that's $400 a month savings. Well, what can you do with that $400 a
Right.
month? Can you double up somewhere else to
Yep.
pay off other debt as you're on your way? Can
Pay
you
off
do,
that credit card payment.
right? Can you put it away to make more money?
Yeah.
There's a lot of different ways you can do it, right? But I think the main thing is right now, and this is what, when you're talking to any clients that are saying, hey, I want to wait till spring, these are what the conversations you should have right now.
Yep.
You
Right
should say, like, well, Mr. or Mrs. Customer, or
now. Right.
whatever you want to, if we wait till spring, like last year, if we wait till spring, we're likely not to get sellers to pay closing costs. Well, there goes the 2-1 buy down,
Yep.
right?
And there goes $12,000 to $15,000.
But and on top of it, if you're in multiple offer situations, which that's what happens. I don't know when the last time, what year it was, we didn't have that in the spring.
Right.
And every year is different, right? The last 3 years, it's always accelerated faster. Like January or December, we're getting sellers to pay closing costs, and then like that same buyer doesn't get under contract. Well, we're taking a break because of Christmas and everything else. And then January 1st, they're out looking at homes and like, hey, there's 5 offers on the
Right.
table on this home already. And that's what it did this year, right?
Yep.
And
It doesn't take much. And that was at a 6.5% interest rate.
right.
You know,
When people say, well, how can it be? I mean, we're not lighting the world on fire on sales. So that's the biggest thing, is that
Right.
the inventory is the problem,
Right.
Specifically here in Minnesota, right? The inventory issue, there's the pent up demand, people trying to buy and so forth. And it just, this quarter, I love doing loans in this because
So do I.
it's so much easier. But
Yep. And I also, you know what, and I kind of keep stressing to clients, like, is it going to be your dream house? Probably not. My second house isn't my dream house, but guess what? I have about 80 to $100,000 in equity in it. Sounds pretty dreamy right now, doesn't it? So think about that. It's like once again, you might not be able to afford a $500,000 house. Probably can afford a $400,000 house. It's stuff like that where, like I said, you don't have to live in this house forever. Start paying yourself first. That's where it starts.
yeah, yeah. And then, the existing homeowners, I, like to stress that the rental market is pretty good, right? So if
Extremely.
you have, and that's the big thing, is like, well, why would I trade my 2.75 interest rate for a 7% interest rate? God forbid, an 8% interest rate,
Right.
right? Well, at the same time, do you have equity in that house? Can we pull equity out to put 5% down on the new one? Can we, and then do rent on your current house? And it's like, okay, what's the rent in your area? Oh, well, it's a 4-bedroom, 3-bath. Okay, so what's the rent like? Oh, it looks like it's upper 2000s right now,
Yeah.
right? What's your payment at? Well, we refinance. We're at a $1,700 payment. Okay, so you're almost cash flowing $800-900.
Right.
Now, what is the house going to appreciate over the next 3 years? So can you buy the new house,
Keep the old
get a company to do all the work, so you don't have to. They can find the renters. They can pull the
Right.
credit on them. They can make the payments to you. You just sit back. Yeah, it costs $100 a month or whatever it is, $150 a month. Not a big deal, right?
Right.
But if you do that, now you're taking that cash flow you're getting from that house to subsidize that new house that you're paying. And then likely
Because we get to use some of that money for income too.
yes.
Definitely.
Yep. So you can wipe out your PITI. So of the payment. So that basically wipes out that total mortgage, right?
And now you're
at the
good.
max. I mean, otherwise there's different ways you have to calculate it. Sometimes you're a little bit less or whatnot, but for the most part, you can wipe out the PITI at least, right? So now you can buy the new house, non-contingent, 5% down. A few years from now, when rates come down, you can refinance that new house, get the lower payment. And then at that time, when rates are coming down, guess what's really going to happen to your house? That value is going to
Yep.
go up. So not only did you cash flow it for 2 or 3 years, right? But
Mhm.
now you have 2 or 3 years more of paying it down. So you got more equity.
Yep.
And on top of it, you have now additional value, right? So let's just say, that the Zillow says 5.3% is what they expect next year, right? That's what it's been the last year,
Mhm.
right? In the last I mean, there was a year we had 16%.
I know.
I don't think it's going to be
I don't think so
16%,
either.
but let's just say you average, let's just say you average 3% on 350,000, right? That's going to be close to 10 grand a year. So you got 30 grand plus you cash flowed $800. So you got another 30, you get like $60,000 additional at that time. So there's ways to look at it, ways to talk to your clients, way for clients to understand like, hey, this can be a good thing, right? Maybe you don't have to take a loan against that. Maybe you got a 401k you can do. Maybe get some stocks you can sell, whatever you can to put together the 5% down minimum. You don't have to have 20% down for a second for your primary residence. That's the other thing. A lot of people just going into it, 60% of people out there, and it's still shocking.
I get a call every day. There's
like,
someone every day.
20% down. And it's like, no, that's not correct.
Right.
Well, it's my second home. I have to have 20%. No, that's not correct. Now, primary residence, 5% down.
Yep.
Right?
Always.
So
it kind of brings us back to what we just heard too. And I'm sure they all heard about it, but I'm almost positive this is what you're going to talk about right now is, Fannie and Freddie's new 5% down.
Yep. That's exactly what I was going with it. Good. So Fannie just announced, not Freddie, Fannie did. So Freddie used to have a program called Home Possible where you could do a 2 to 4 resident home with 5% down, right? But you had to keep your income below the AMI, right? 80% AMI. Well, if you're renting out, you have to use that income as well if you're going to use that income to qualify. So a lot of times that would take people out of the qualifying.
Yep.
Because the house purchase is say $400,000. You got 5% down, but you got a rental income on the other side, $2,200 a month you're renting for it, that side, or maybe even 15 or whatever it is. You add that to your income, now you're over the income limit.
Right.
So now you don't qualify. Now you have to go to FHA, which, that can be done too, but there's a lot of nuances with FHA and a multifamily as well.
Yep.
So Fannie, not wanting to, and I think they wanted to help drive multifamily sales because multifamily sales has been down, came out, no income limit, 5% down, period. Right? Primary residence, you gotta,
right.
I've had too many people call me and say, hey,
all these investors, down? Like, these investors,
I can do this.
They were drooling there,
Absolutely. So you can't do 5% down as an investor, but you can as a primary resident. If you're going to own this property, you can do, and now think about this. If you can put together 5% down on a 4-unit, right?
Oh yeah.
And you're going to cash flow that whole thing. Right?
The whole thing.
And then,
and your other place is paying you rent. You're not going to have to pay probably $1.
Yeah. I have
figuratively speaking.
I have a client right now. You got to be careful with that because they can't go from like a $450,000 home with 5 bedrooms and 4 baths and go buy a multifamily and have a couple rental properties because I think that's a little bit of a red flag. You're going to move out of this house and do a
2-bedroom duplex,
2-bedroom quad,
or a 2-bedroom quad. Yeah.
But anyway, there's
going back to college.
Yeah. Is there mortgage fraud? But hey, that can happen. Like, oh, I'm going through a divorce.
Sure.
Absolutely. My kids just left the house. It was, I'm a single, whatever, blah, blah, blah. And it can be done.
We have a family who wants to rent our big house.
Can you legitimately say that yes. They can't say no to it.
No.
You just have to basically show that this is what you are doing, right? Anyway, that's an extreme example, but 5% down, now look at what kind of wealth you can build. And specifically, I look at it because you don't get the existing homeowners typically will do that, right? But first-time home buyers for just a
young,
duplex,
single people, young married
just
couples.
a duplex that they, trying to get in St. Louis Park, Minneapolis and South Minneapolis or something like that. And they're like, well, the price of the home is so expensive, but well, do you mind if you bought a duplex, rent out the other side, now your payment is a lot less, right? And now you can build wealth. And after a couple of years, you maybe can store all that cash, put 5% down on the next home, next duplex, I don't know.
Depends what you want to do, right?
And then rent out both sides of that one, really subsidizing, or maybe even a try or whatever it is, right? So, the good news is Fannie and Freddie are doing different things to make this work. So this 5% down works will start November 18th of this year is when we can fly with that.
Yep.
So that's my suggestion is like if you're an agent listening to this, start reaching out to your clients and just say, hey, talk to Brandon or Terry.
See where they're at in life. Yeah.
Number one, I was gonna plug us first, but um, these are options that we're gonna want to do. There's other things like next week. So on the 15th of November, we are offering a reverse mortgage class,
Mhm.
a lunch and learn. And well, what's in it for a real estate agent? Well, reverse mortgage has had a lot of negativity over the last couple decades, right? Because they came out and they didn't people would take all the equity out and then be left with nothing, and all of a sudden they would live longer,
Right.
right?
Well,
So
the
things that
shift.
just
Yeah.
would happen, right? So now there's parameters around it that it's way different now. But from a real estate agent side, or even as a buyer, what they can do now is if you use a reverse mortgage to buy a new home, right? Let's say you have a ton of equity, if you got a house all paid off and you're going to buy a new home, and you want to downsize,
Right.
you can still and not take all the money, pay cash for the new. I mean, obviously that happens, but you can take that money and just say, hey, we want to live off of this too, but we still need to have a mortgage,
Right.
right? But it's a reverse mortgage. So we're putting enough down and we're taking some of that draw out to do it. So
Isn't there like I think I read it this morning. I think it was this morning when I was wide awake. 60%. I'm throwing this number out there. I think they said of all the homes in America are owned by a baby boomer. Is that right? I think it's something crazy. Like it was a crazy fact.
it's a very, very large
So
number,
all these people, I
right?
mean, if you can if you can tap into that,
Yeah.
it's huge. Yeah.
And a lot of homeowners, older home baby boomers, they don't want to necessarily, you know, you get lifetime in their houses, and then they have to downsize, they have to
Right.
do this, so they don't want to do it.
I ain't living in my
They
house.
certainly don't want to, a lot now people don't want to necessarily move into assisted living unless they
They
have
have
to,
to.
right? And families don't want that. Obviously, going through COVID, they saw what happened at,
Hmm.
some of these places. So, now there's more in-home care, more things like that. So there's things to do there. So, but they just need to get out of that big house, that big 5-bedroom house, because it's just, grandma and grandpa, mom and dad,
It's a lot.
whatever it is,
Yeah.
it's a
It's
lot,
a lot to take care of.
right? So there's, alternative. There's a lot of products out there that aren't just this standard straightforward financing that we can do. Of the other things that I'm going to hit on real quick is non-qualified mortgage. I mean, there's more non-qualified mortgage broker loans that are happening now than there has been for a long time. you know I'm really focusing on self-employed borrowers, being an expert in this category for self-employed. Like, okay, can we do a bank statement loan for you because your taxes show you don't make enough money on paper to buy this house, right? Which isn't necessarily true. You can buy the house.
Right.
You just have to show on taxes legally that you have all these write-offs. Well, in turn, as a mortgage lender, traditional Fannie, Freddie, FHA, VA, USDA guidelines, you have to use the tax returns,
Yeah.
right? Well, there's a lot of programs that we don't. The bank statement loans, and then investors, we have DSCR loans where you can just, use the rental income from that property, right? Um,
NAF does have more products than probably any lender
we
out
just
there.
added 70 new
Yeah.
products in the last 60 days. I was shocked when I heard that.
It's a lot of products.
So that's a lot
Yeah.
of products, right? I mean, can you know all of those products? You can't.
It's
You know,
until something arises, until the question arises, you're like, I'm not going to answer that right now, but I bet I'm going to look into it and find something for you.
yeah, NAV cash is where, that's what people really can't. There's a lot of times people can't get their head wrapped around NAV cash.
Right.
Oh, they're going to buy my existing house.
One of the greatest products in the
we are
world.
buying the house that you want to buy in cash. Hopefully, a cash offer gets you a discount on it.
Right.
And then it gives you time to market and sell your house and then move into the new house
Right.
and rent it back until your house is sold and then finance the new house. Or maybe you don't even have a house to sell. Maybe you just are having a tough time getting a house because every house you're doing these turnkey homes that are beautiful and you're just having
They're
a
up for a
struggle.
day, they're gone in 2.
Right. There's 10 offers on it. Well, NAV cash wins at about 62% of the time.
Yep.
So, again, cash is king, and a lot of times you get discount on cash offers. So
People like
you
the
want to
easy
stay
close. People like the fast close. Agents like it even more because you get paid off the first transaction.
right.
2 weeks, 2 to maybe a little bit after that. That's all it
Yeah.
takes.
I'm really excited because in our old company we use SnapDocs for closing,
Yep.
right? So I'm super excited we got this now
So
here.
happy.
And it looks like Ron closings are coming next year, 2024. So it's complete remote closings. So that'll help. Obviously, I think no, it was Brett that had, people flying here from Washington to close on their home and then flying back. Said now you don't have to do that anymore. But
I did one where they closed at his house in Detroit two
no,
months ago. They went
no,
to his house and
no.
that was pretty sweet. He was like, wow, that's nice.
All right. Well, anyway, there's plenty of products, but we wanted to highlight these, why this time of year to buy. Please like and subscribe. Reach out to us with any questions that you have, whether you're a buyer, whether you're an agent, whether you're the other loan officer. There's a lot of companies out there, people moving around. Come talk to me. I truly have, moved here to NAF in the last year, and it's amazing what we can do and offer and the people that we work for. I love it.
And remember, next Wednesday, the 15th,
The
November
15th.
15th, here at the St. Louis Park office, we're doing a lunch and learn about reverse mortgages. So if you're an agent and want to learn, either reach out to us here in the comments and we can get you more info on it, but it'll be at 11:30 a.m. next Wednesday.
Awesome. Well, thanks again.
Thanks. Have a good day.